Singh joins us, and in 24 hours, Anurag, you ready? He's not ready.
Yeah, absolutely.
You ready, right?
I am, yeah.
You read the news? Hopefully a
Absolutely.
ceasefire.
Yes, I
24
have.
hours ago, it was all missiles here and there. Now it's a ceasefire. And 24 hours
Correct.
later, what will happen, we don't know.
Well, Nikunj, I would say look at the refreshing change from what we had last 4 years with Biden and the current administration. I think they were very decisive. I liked the way Wall Street Journal puts it. They said Trump meets the moment. That's their editorial, which is that they made a point that look at the last four presidents they had. They knew Iran is doing something. They didn't bite the bullet. And here comes one president who said, okay, now we need to stop this because nuclear proliferation cannot happen. So I think overall, I like the bold move. I also like, the general assessment in US, which was that Iran would like to buy time. They don't have the capability at this point in time, which is exactly what they have done. So overall, I think, and Nikunj, I think I was listening to a view, they're so apt, which is that the world is now more peaceful and more safer place. And it is more peaceful and safer place with Iran not having nuclear weapons. So I think I'll take the all the positive that comes with this, which is that a clear message to the world: no nuclear weapons by any other new country, and then the business goes on, right? So I would say all positive. I am more confident that it will turn out to be a decisive moment in history and in time. So that's how I see it. Yeah.
So what should one do? Long crude, short crude? You go long, then a ceasefire. You go short, no ceasefire.
Yeah. So crude has not turned out to be a good trade, right? With Trump, with the drill baby drill, it's not turning out to be a very good trade for the oil companies because the crude prices are constantly getting capped. So I think that's the view. I think all of these, even Buffett built up this good stake into, some of these, oil companies, but they haven't really turned out to be very good trade. So I think oil, generally the view is, and that's how I also see it, that it will be capped because low energy is one of the look with tariffs. Low energy and low regulation and low taxes are the other three benchmarks of this government. So low energy cost is a primary pillar, and as long as that stays, which means oil and crude and everything will be contained. So that's not good. But if the oil is cheaper, everything else is good. Businesses do good, inflation is low, and I think it is very good for emerging markets too, right? Especially India. So that's the positive that comes out of it.
All right, but Anurag, the other thing that is surprising to see is the movement in the gold as well as the dollar index. Help us understand that what is your take on the dollar index movement and what's keeping this particular index below that 100 mark, despite the fact that we have seen so much happening at the war front. And along with that, gold prices, they did not shot up as much as that was anticipated. The safe haven buying was not there. Give us your view there.
So let's kill the gold first, Shrishti. That's easier one. I think we spoke about a year back. Everybody knows that that's an open secret. Central banks have been buying 20% of the new gold supply in the market. Plus Chinese with the property market tanking, they've been buying gold as well. So there was a spurt. But however, I think that has kind of hit a ceiling. It's no longer an alternative to the dollar. So of course, I mean, there is a limit to what gold can achieve. The dollar index is more interesting, and I would say that's a bit of a self-goal by the current administration. So look, with tariffs, they thought more money will flow into US, and so dollar should get stronger so it can buy cheaper goods from other countries. So that was the whole idea, that if you put a tariff, because the dollar is stronger, half of it will be taken up by the strong dollar, and the half of it will be taken by the low margins by the exporters. Now the reverse has happened. So that's a bit of a self-goal. I also, and I think that's where the administration also has realized that many people would say they were trying to weaken the dollar. I don't think that was the idea. At 108, it was too expensive, but I don't think they were trying to get it below 100 because then the imports become even more expensive for US. So it's a difficult spot, but all I would say is 56 to 57% of dollar is euro, basically, right? and the euro has gone up proportionately. So I think that should also balance out, right? I don't see any reason why Europe becomes suddenly a good safe haven for the investors. It's not really. So let's just by the way, one more thing, Srishti. It's interesting. I think China continues to dump the long-term treasury bonds, right? And that is also putting pressure on the yields and thereby also the dollar. Also, it's raising the yields, but at some point, I think it is putting pressure on dollar because there are outflows happening. But then I think the higher yield should also help bring in more money. But currently, I think because China was dumping, Japan was dumping, that might be a reason dollar is low. We can only make a conjecture. I don't have any firm view after this. But of course, we want a higher dollar. That's my sense. The administration also wants this. Srishti.
Sure, Anurag. So conjecture is all we have at the moment in terms of global news as well. Hi, morning. But what do you think is next, or what lies ahead for the global markets as well as markets back home? Do you believe this is the peak of bad news that we've come out of? But now with the ceasefire announcement, do you also believe that this is the peak of good news we're going to get? And how do you think the markets are going to price this in?
Yeah. So I have always maintained this firm view that we have to watch 10-year yield. I think it's at 4.35 now. And I think with the pressure now mounting up on Chair Powell, that look, I think you are holding up the rates at high level for too long. I understand these are two Republican-leaning governor, but the pressure is mounting up. So I think once the 10-year yield drops below 4, there are signals that we might be 50 to 75 basis point higher than usual, the normal 10-year yield levels, right? So the FOMC should lower rates. That should be good for emerging markets, especially India. Money going out should stop, rather it should start getting in. But once the 10-year yield goes below 4.35, and I think by end of the year, we should get there. Global markets look good. I think the market is looking good for a rally. I think look how quickly, I mean, there was a dip and almost not a dip, right? It was quickly bought into. And I've always felt that, this, and even now, there are very deep, cheap pockets within US market, outside the big tech, right? So that's the view here. India looks good. I've turned positive on India. I mean, of course, there are no big bargains, right? But you can safely get 10-12% return. That's not bad in today's environment. Where in the world can you get that, right? So there are only limited places. So that's my take on India. That's a high level view how I see it.
All right, Anurag. Thank you very much for joining us. Now, as we walk into trade this morning, what are the big, talk